Hey guys, today's Wednesday. We at FOM, no, not FOMC, but NFP news at 8:30. And actually, today was first a really high resistance day within the opening, but then actually was a really clean market maker sell model we catch today, as you can see right here. Some brutal stops in here, but really managed to catch a short basically right here. Beautiful partials. We could not hold for the external sales liquidity, but in that case, that's all we need. And yeah, just or basically just start with breaking this trade down. Let's drop to a daily chart. Just let's remove the execution. So what we can see right here, yeah, actually a more difficult day today on the daily chart to recognize the bias because we just basically have no daily body, but we managed to sweep daily buy sell liquidity, and we have also the higher time frame gap right here, so the volume imbalance, that's definitely a support area in that case. So we can actually drop to a hourly chart. I think nothing special in here as well, so let's just drop to a 50-minute chart. So actually Asia and London weren't really doing much, so just consolidating. Midnight opening price up here, and then yeah, we're waiting for basically the NFP news, and then we just rallied higher. We swapped daily buy sell liquidity as I mentioned before, and from there on then also swapped the New York Open kill zone buy sell liquidity, and therefore we really have basically swapped not only buy sell liquidity but also swapped engineered buy sell liquidity in that case with the opening, manipulating higher, and from there we sold off and swapped, traded back to the midnight opening price, traded back to the 8:30 opening price, swapped news data lows, and also the low which formed at 5 a.m. So with the end of London basically in that case. And we completed our market maker sell model. So before we drop lower, I want to show you regular trading hours. So actually quite interesting today as well. Why? Because we have a aggressive opening with the news. So we have a aggressive new opening range gap with the news to the upside, which consists of, as you can see right here, 183 handles. So we are in trending conditions. What I like right here is basically that we from there on really really disrespected our quadrants levels. So that's really important if we want to see lower prices. We don't want to see that we respect the upper quadrants. So that was really confirming my bearish bias today. Why? Because we really just closed through the upper quadrants. So yeah, definitely not respecting the level right here. And with that, we also have clean 5-minute sell liquidity right here, and therefore we expect that we will reach back to the CE level right here and also to the lower quadrant and eventually close in the gap, and with that we also trade back to the 8:30 opening. Actually, that's aligning with the close of the new opening range gap. Yeah, so completely traded through today's new opening range gap. That's what we want to see, and then also we traded clean into the levels we have right here, and from there we retraced with the London close macro. So back to NQ. That's what you can see right here. So 8:30 relatively align with the opening of today's new open range gap. So that's basically it. I think the S is nothing really special. We had lots of SMTs being in play today, so maybe. So as I was saying before, lots of SMTs just being in play. I can't really remark them now, basically out, but yeah, just now back to the executions. We can see right here. So it was a really difficult opening. Why? Because already with 9:30 we traded higher, scrapped the New York Open kill zone, buy sell liquidity, and from there on our highs basically in, and we can expect lower prices. But why we definitely have high resistance in here is due to the fact that we still have to wait for the 10 a.m. macro to basically to be able to spool lower. And also if we go back to the 5-minute chart, we can see that we are right here in advance of the a really huge high time frame gap, which kind of is, I think, responsible for high resistance in here, because with trading into it, yeah, we definitely close inside it, but only traded basically also below the wick right here. And if we go to a 15-minute chart, yeah, we barely basically traded into the 15-minute gap right here with the wick, and from there on really had a huge reaction higher. So kind of difficult conditions. Still, the draw to me was definitely clear. I wanted to see lower prices, and my first entry was really clean. So we had SMT, we had a really small fair value gap right here combined with a volume imbalance, and we had a order block which we basically wicked above. So therefore, to me, that's manipulation higher, definitely, and also combined with SMT, to me, that's a perfect reason to go short. Also, 3 minutes in advance of our 10 macro. But yeah, in that case, because I think the narrative is so obvious, we just have more high resistance. We will have more short-term run and stops, and make it basically for us traders more difficult to be able to participate within the move, inside the move. So got stopped right here, put my stop above the invalidation point, completely valid loss. Then we traded higher and instantly got a reaction, entered right here, stop too tight in that case, should have been above, I think, the upper quadrant of our down close candle, or if we take the order block right here, it should have been, yeah, I mean, it was even above CE. I think it's difficult to say. So if we take like the consecutive candles right here as one order block, since the down close candle, you can see we're reacting perfectly to the upper quadrant, but still wicks could have been wicked higher. So kind of a difficult re-entry. Still, if we want to catch a move, in that case, we are really, yeah, in advance of the opening, in advance of the 10 a.m. macro. So we could have really aggressively traded lower, but yeah, I just take the stop out. And then really unnecessary, so perfect re-entry in my opinion right here, because we have equal highs, wicked above it, engineered buy sell liquidity in my opinion, traded lower, respecting the fair value gap, so really clean, and added also right here. And then I got stopped due to the fact that I had a daily loss limit. So I was in a bit of a drawdown, and because I was down right here at around 200, my position got closed, even if I had my stop right here at the low of the high time frame gap. So I still would have been actually got stopped out. So I definitely had wrong stop loss management in that case. I think it definitely has to be above the short-term run stops in that case. Still a bit yeah, unnecessary. In that case, it saved me actually, but a bit, yeah, definitely today really learned a lot about stop loss management. Really have to rely on putting my stop above the short-term run and stop. With the SMT, we had it in play, but yeah, just still once more in high resistance, I I always have a too tight stop. The market is in that case not perfect. I have to trade a wider stop, because yeah, the objective is clear. Still re-entered with 2 contracts, because I really had the conviction that we would trade lower. Also the progression in that case. And yeah, it was just right about that. So 10 macro delivered spooled lower, first partial right here at the midnight opening price, traded into the suspension block, traded lower. Quadrants of the order block right here, traded into the lower quadrant level. That's what we want to see if we are bearish. Even failed to close above anything, or basically failed to close above the lower quadrant, and then sold off. And closed right here. I think it could have even hold for more, because we closed inside the high time frame gap. To me, that's really bearish, also due to the fact that we've still failed to take out the equal lows right here. But yeah, once again, with in that case only 2 contracts, are still too less, not too less, too small of a position size. So too just, yeah, too few contracts. Yeah, really clean partial, also really clean partial, and then we could have really aimed for the external sales liquidity. But yeah, I'm really content with that, because we also right here close in basically our today's new open range gap completely. So therefore that's, yeah, possible. And with that, I'm actually up 93 on the day, so really clean risk to reward in that case. That's only possible because I've really tight stop loss managements. In that case, I get stopped definitely very often. I don't have a huge win rate, but if I'm basically part of the move, I know where we will draw, then I will still make money. And that's, I mean, I definitely have to still avoid some losses in here. I think one is definitely avoidable. So the third stop right here is definitely avoidable. Yeah, I mean, risk management could be that you stop trading above 2 losses, but in that case, it's so obvious. And then to me, it doesn't really make sense always, but yeah, it's not really easy. That's the truth about trading. It's not easy. But yeah, I think that's basically it. Hope you learned something new. Hope you enjoyed it. And I think see you next week, basically, because yeah, tomorrow I will not trade right in advance of CPI, and no, tomorrow is actually CPI. No, Friday. Sorry, guys. Friday CPI. We will not trade tomorrow because we are in advance of CPI. Yeah, that was actually right. Just got it wrong in my head. I don't know. And then we have to see how we trade after CPI news on Friday. But I would like to actually just end the week right here because I met my profit targets in that case. Yeah, we see how we deliver. And yeah, see you soon.